Hello, fellow cash flow builders. Welcome to the Facebook Live with Building Cash Flow in the Know. And what will be what I share about is to look at the charts to see how the market's moving, to understand a little bit about investors' sentiments, so that it can help me and probably help you also to have a sense, right, to whether to stay in the market or to get out, or especially during this period of time, whether to get out sooner, because there might be some opportunities to have more cash on hand, right? So this is not financial advice. This is a conversation that I have with myself every day, and I am inviting more people to come on board, because having conversation on my own, firstly, is boring, right? It gets dry after a while. Secondly, I cannot expect myself, I don't expect myself to know everything there is to know. So the more there are eyes on the market, there's more, ability to collect information that, we can share with one another as well, so that, we can gain more insights. Of course, having more choices is always better, right? Especially in markets like now, where we got to be patient. Don't need to rush, don't need to get too panicky if you don't see results as much as or as soon as compared to the past 2 years. So let's go, right? Because after seeing so much red for so long, finally we start to see some green. So if you have done some investing yourself over the past couple of days, congratulations. Doesn't really matter which industry sector you were invested into. Because it's all green today, very, very green. So so the question is this: will this green sustain, or is the wave going to continue like the past 3 months, where we see a bit of riptide, some wave, and then another riptide again, right? And sometimes with the next riptide, the market trends further down. So let's look. I love looking at all the indicators. Let's start with the volatility index, right? It has fallen from 33 points to 29 points yesterday. So that's an indication that the volume of put options in the market is reduced. And that means that actually is an indicator that investors are becoming more confident with the market, because they are using less put options. Put options is something that they use expecting the market to plunge, to ensure their investments. So with this, it looks like it's an indicator that investors are possibly becoming more confident about the market. So of course, again, the question is, will it sustain? So let's look at the put call ratio. So what happens here is, when put call ratio is basically, of course, comparing the volume of put options to call options that's being purchased in the market. And when we see a black bar, it means that the volume of put options is higher than the volume of call options. So despite seeing the volatility index indicating that there's a drop in the purchase of put options in the market, there's also a further drop in call options. So that could possibly lessen the indication that investors are becoming confident about the market, right? So the other indicator that I would also like to look at would be the volume of the volume or the ratio of bullish investors to bearish investors. So the green volume indicates how many investors are remaining bullish, and the red volume, which has increased, right, means that the ratio between bullish investors to bearish investors has fallen over the past couple of days, from a ratio of 0.4 to 0.28, the lowest it has ever been over the past 3 years. And over here, what we are looking at would be the candlesticks for the S&P 500. And we had, return back to close to the previous low, which happened in the middle of March this year. And over the past couple of days, we have seen some kind of recovery. Actually, it's hard to say whether it's a recovery or not, but we are seeing some green over the past couple of days ever since the S&P 500 ETF had fallen to a low that is a repeat of the middle of March. So it took about 1.5 months to return back to that same low. So it's looking at this whole period from the previous low from the low in mid-March to the previous low. It looks like there is a riptide going on, and then before the next wave comes back in, which so over here what we see is something like a riptide and then the wave coming back after the riptide. So is it going to repeat again, right? Maybe, because there's no new low and there's no lower low compared to mid of March, and we are seeing good highs, not a higher high, or at least a higher high compared to mid-March after the riptide. So that would give investors some confidence about the market. Of course, what had happened over this period of time, right, before 26 April, one of the things that I can recall would be Jerome Powell telling us that the federal government is getting ready to increase interest rates by another 50 points, which is basically 0.5%. So that created some movement in the market towards the downside, right? So looks like investors are getting quite comfortable with that piece of information, because after all, they're not going to, the federal government is not going to increase interest rates until June, right? Again, things that I say on this live, if you have another point of view, please leave a comment down below, or if you want to save me some face, you can DM me as well. I appreciate that. But of course, if you leave it in the comments below, it creates more conversation, right? So that you can encourage more people to come forward also. And yeah, there's so much to learn in the market. Every day I see something new. Every day I see something I don't know, and I need to do some research about it. Okay, so that's it for S&P 500. I like to look at the triple Q, which is the US large cap and technology companies, right? So likewise, we are seeing something like a riptide and a wave starting to form after the riptide. Still, the question is whether this wave will continue to rise or it will wane off and then another riptide. We can also look at China, which is not that popular at the moment, because the government is just announcing how they want to support their companies, and they want to open up borrowing to companies. Companies need to borrow money. Companies that don't borrow money are not attractive to investors anyway, right? So will that give more confidence to investors? Not too sure. The wave looks like it's waning out already, compared to the previous, also in mid-March, right, where there was a very steep plunge over a period of 2 weeks. And then the Chinese government announces that they will support their companies. They will not let their companies go down under. And we saw about 39% recovery from that piece of news, and then it was just flat all the way. And then boom, because no action, investors get a little afraid, right? So they started to sell off as well. So will there be a way for China? Hard to tell. I'm not very optimistic about it. So if you have money in the market right now and you're feeling a little pessimistic, like you are noticing more of a downtrend than a possibility of uptrend, try your best to catch this wave. I'm not sure it will last long enough. But if you're optimistic that for some reason you're optimistic, please do share if you're feeling optimistic about the market, right? Like seriously, please do share with me. Dollar cost average out of the market, really, like cash, being able to hold on to cash or cash equivalent of your investments will definitely give you more power moving ahead, right? So once more, thank you all for joining me on this live. Let's hope, I mean, I want to be optimistic as well, so let's hope that the wave will grow before the next riptide, before the next piece of news comes to discourage, create more uncertainty for investors, right? So once more, please leave your comments down below whether you feel that the market is going to trend downwards, or you have some observations that give you the optimism that the market can, trend upwards. Thank you all so much for joining me on this live, and I will see you in the next one. Take care and stay safe, stay invested. Bye.